Hi Charlie, welcome to my 46th video polling analysis where I break down and analyze the LinkedIn poll that I posted last week and that closed this morning. Now I'm going to be honest and admit that last week's question was not the most exciting one that I've ever come up with, and that question was, which company stock do you think will increase the most this year in 2025? There were 4 answer choices: Amazon, Alphabet, Meta, and they will decline. Now, I wanted to put in parentheses next to the Alphabet answer choice that this company consists of Google and YouTube, and I also wanted to put in parentheses next to Meta that Meta consists of Instagram and Facebook. However, I thought that would make the entire question look a bit clunky and that I might run out of characters that I was allowed to use, so I just left it as Amazon, Alphabet, Meta, and they will decline, hoping that my voters would have at least some familiarity with these companies. However, considering that this poll only got 68 votes, which is significantly below my average of 80 to 85 votes per poll, I think that this question might have been a bit technical for my voters' tastes. Not that 68 votes is a bad thing, my very first poll only got 9 votes, but this question was definitely oriented more toward people with more than a passing familiarity with the financial markets. For instance, finance majors in college like myself, financial professionals in the industry, etc. So anyway, on to the actual distribution. 44% of these 68 voters said that Amazon would increase the most this year. 12% said that Alphabet would be the highest growing. 12% said that Meta would be the highest growing, and 32% said that all 3 of these stocks will decline, which is not necessarily surprising considering how uncertain everything has become economically and financially speaking. After a few months in early 2025 of the stock market seeming to rally, there's been a bit of a decline in the past few weeks. I can't say that I'm a financial professional right now. I'm not, I'm just a student. But it does seem like there is some turbulence, some uncertainty. We might be entering a correction, maybe even a recession. But there's also the argument that we might have had a recession a few years ago in 2022 when the stock market basically tanked more than a little bit. But again, I'm not a financial professional, so please consult an actual financial professional for legitimate financial advice. Do your own research, please. I'm literally just sharing my opinion on the subject and certain things that I have heard about online, read about in my newsletters, etc. So anyway, onto the statistics about these 3 mega stocks. In quarter 4 of 2024, Amazon earned $17.3 billion in ad revenue. This was an 18% year-over-year increase, indicating that this particular line of business for Amazon is growing quite rapidly, even though Amazon's bread and butter of its earnings remains shipping products to millions of people within hopefully a few days a week at most. Amazon's total 2025 ad revenue was $56.2 billion. Google and YouTube, whose parent company is Alphabet, earned $72.4 billion in ad revenue in quarter 4 of 2024. Meta earned $46.7 billion in ad revenue in quarter 4 of 2024. So this is significantly more in total ad revenue than Amazon is earning, which makes sense because Amazon's primary business is, again, shipping products, whereas Google, YouTube, Instagram, and Facebook basically subsist off of ad revenue because they're free platforms to use, but you are basically paying with your time and attention in having to watch and listen to a lot of advertisements. Even if you turn the volume off and ignore them, you're still watching the visuals, you're still kind of subliminally learning the names of these companies. In 2024, Meta earned $160 billion in total ad revenue. Not really surprising. Facebook and Instagram have been around for quite some time. They've mastered the art of the algorithm, of showing the right kind of content, I suppose, to the people who want to see it, of incorporating ads into the content in a way that is attention grabbing, because obviously those companies want to get some bang for their buck. They want to get more brand recognition. They want to get increased sales. They want to convert those clicks into buys. But also not distracting too much from the actual content that you're trying to consume on the platform, which usually 99.9% of the time is not ad related. Also, advertising analysts expect U.S. ad revenue to grow by 4.5% in 2025, which is obviously good for Alphabet, Meta, and Amazon's ad business, because those companies, not Amazon of course, but that line of business for Amazon, rely heavily on ad revenue to pad their bottom line. So obviously if the entire ad revenue industry is growing, then they will have a decent year. However, this 4.5% growth rate is down from the 9% ad revenue growth in 2024, perhaps an after effect of the lingering economic uncertainty, the stock market not doing particularly well, and if the stock market's not doing too well, then a lot of these big companies are probably going to have to tighten their belts a bit, and often that means cutting some of their marketing budget, meaning they have less dollars to allocate to these Instagram and YouTube and Facebook ads, and that ultimately impacts those companies, and that they have less ad revenue and they overall make less money. But anyway, Charlie, as I said, I'm not a financial professional, so please consult a financial professional for sound, legitimate financial advice, someone who's licensed, someone who's knowledgeable, someone who's capable. But anyway, thank you for listening to my little spiel, Charlie, and before I go, I would like to show you the LinkedIn poll as it appears on the LinkedIn website, just to show that I am not making all of these statistics and distributions up. So this is the poll as it appears on LinkedIn. As you can see, it only got 68 votes. Amazon was the most popular choice for which company's stock will increase the most this year, but they will decline was a fairly well-represented answer, the second most popular one, which is not surprising considering the economic uncertainty that we are facing right now. Anyway, Charlie, thank you for listening to yet another poll analysis, and stay tuned tomorrow for my 47th poll analysis. I can hardly believe that I have been doing this experiment for nearly 7 weeks. On the first day, I doubted that I could even make 5 videos in a row for 5 days, but almost 7 weeks later, I'm still here and I'm still pressing forward. So thank you, Charlie, for being such an emotionally supportive cat, and I look forward to sharing more information with you tomorrow. Bye.